So with that being said, what we'll do, guys, we'll move over to the markets and we'll go through some technical analysis. So I want to start off here with gold, which to me is looking very interesting at this point in time. So if I just zoom out a little bit, I'll just bring out all of my levels on the chart for you. Hopefully you can see that well. Okay, fantastic. So first thing I want to point out, which has been very interesting here on this breakout that we've seen with gold, is that we did hold on to the lows at 1,250 US dollars, which we formed prior to Brexit, where we saw a 1,000 point move to the upside on Brexit when the UK came out of the European Union. And with that, we saw a huge move to the upside. Now, it's interesting right now. In fact, gold's just broken resistance right now, 1274. So that is starting to pop. So 1,250 US dollars. It's been an important level on a closing basis. So although gold has breached that zone and we've had retest below it, it didn't close below it, which was important. In fact, if we had a close below 1,240 US dollars and especially 1,230 below that, it was very likely we would have seen a move down to the 50% Fibonacci retracement level, which sits at 1,210 US dollars. That would be a 50% correction of the run up at the beginning of this year through to the highs that we got after Brexit towards the end of June. Now, we've had this sell-off, obviously significant sell-off more recently, one of the most significant down days on gold here for over about 18 months, this big sell-off that we had a couple of weeks back. Since then, gold has remained in quite a significantly oversold condition, and we've seen it just grind higher. All of last week, it held support. It continued to consolidate and ricochet between support and resistance. And by the time we finished on the weekly chart, we developed a inside candle here. So this candle here was fully engulfed by the previous high and low. So this often gives rise to a potential breakout trade. It could have broken below support, in which case there was downside risk here for gold. Could have been a shorting opportunity down to around the 1210 to 1200 zone, but it was quite significantly oversold after this move to the downside. And you can see here gold is starting to pop. Now, I am expecting a retracement here. We've been looking at this actually over the course of the last week. We have positions on the metals right now to trade this retracement. And what I'm looking at in the short term here is just to pop back towards previous resistance. There's a lot of overhead resistance around the 1295 zone. We broke through 1300s. That was the level which really saw this waterfall move to the downside with gold, where it sold off very quickly. We've corrected off the highs of 2016. Now, a few points to note. Gold, your typical correction for gold lasts between 1 to 3 months. So especially after we've had a run up like we have this year in a bull market, when we do get a correction, you can expect historically an average correction on gold lasts between 1 to 3 months. We've now been going with this correction since we topped out at the beginning of July for over 2 months and 1 week now. So we're well into the sort of time frame that you would expect gold to start to retrace and build up some sort of a retracement here to the upside. And that's what we're seeing at the moment. Now, if we can get a break back above the 1275 zone, and we seem to be heading for that today, we've just broken above a monthly pivot. Actually, if we break above the 1277 zone, I see the potential, and I mentioned this also on last week's commodities chat, that we were looking for a move back towards a retracement, back towards the 1280 to 1300 zone. And that's what I see playing out at the moment in the short term. Whether this is the bottom is in for gold at the moment, I would suggest that we are going to get into an overbought condition once we get if we do retest the 1300s. I've come off, a lot of our indicators here show we've come off a significantly oversold condition. But if we do get a move back towards the 1300, we're going to be moving into an overbought condition. And I would just be wary of overhead resistance here around this zone. It is a point where we could see gold get sold back into. Short-term retracement is all I'm looking for the time being. Now, if we do pop up to the 1300s and then we sit at that level when we move sideways, yes, then there is potential for another leg higher and a breakout above this overwhelming trend channel, which we had previously, which got broken to the downside more recently at the end of September, beginning of October. So if we were to see a full-on reversal here from this point, which then led to a break back up to 1300s, consolidate around this zone, then break out, yes, I do think we could go quite significantly higher here on gold. However, on the flip side of that, if we just have a shallow retracement, previous support, becomes resistance, and then we just rotate lower. If we see sellers come back into gold here, we could be setting up for another significant leg lower, which could certainly retest the 50% Fibonacci level at around the 1200s, if not lower.